So to me, the price action doesn't start being unexpected until we're north of $1 million a coin. We haven't hit an all-time high again in euros. So I think part of this move was certainly just the dollar falling relative to other currencies. To me, it's just kind of the thesis playing out that more and more people are realizing that Bitcoin is one of the best, if not the best, risk-reward sort of risk-adjusted bet that you can make.
Welcome back to the Bitcoin Policy Hour, a weekly podcast hosted by the Bitcoin Policy Institute. We've got a little change of guests this week. Usually we've got our executive director, Matthew Pines, here, but he couldn't make it this week, so we're subbing in David Zell, our co-president. David, how's it going?
Yeah, excited to represent the JV, the B team here. I cannot riff about aliens and geopolitics like Matt, but excited to be on the show.
Excited to have you. And as always, BPI's head of policy, Zack Shapiro, joining us. Zack, how are you feeling about Matt Pines not being able to join us today?
I'm feeling a little lost, to be honest, but I think we'll make do with the JV team.
Love it. All right. It's obviously crypto week. I don't know how many of y'all are kind of keeping up with that. So we're going to dig into that. But before that, we had some exciting price action this weekend. And if there's one thing David Zell likes to talk about, it's the price action. So David, any hot takes on what we're seeing here? I heard some mentions that maybe it had to do with the Bitcoin treasury companies buying, but I'm not sure if you have any color to add here.
I think that they're selling dollars for 11 to 12 cents. And I suspect they'll probably continue to sell dollars between 9 and 12 cents for the next few months. I mean, for me, the price action is not unexpected. Like my sort of view on Bitcoin is that, there are like tail risks, like nothing in life is certain. But I don't see why Bitcoin doesn't reach a gold parity in relatively short order. So to me, the price action doesn't start being unexpected until we're north of $1 million a coin. Both one on account of, the dollar weakening. Like I think it's notable that we haven't hit an all-time high again in euros. So I think part of this move was certainly just the dollar falling relative to other currencies. But yeah, this to me is just kind of the thesis playing out that more and more people are realizing that Bitcoin is one of the best, if not the best, risk-reward sort of risk-adjusted bet that you can make. I think one thing that is sort of different in this cycle is that I don't think this is very retail driven. You can look at Google sort of search history and volume, and it's nowhere near what it was like in 2021. And I mean, for listeners who we're sort of talking about Bitcoin in 2021, this is around the time when, everyone from your life starts texting you, asking if now is the right time to buy Bitcoin. And maybe that circle of kind of friends or friends of friends has exhausted for me personally, but anecdotally, it doesn't seem like retail really cares. I think part of that is just a unit bias. People still don't quite understand that you can buy a fraction of a Bitcoin, that there are 100 million Satoshis constituting one BTC. But I also think that the profile of the retail investor, Bitcoin is just sort of increasingly not a get rich quick, moon math investment, right? Like even if you believe that Bitcoin is going to reach, $500,000 or say $1 million, people aren't like retail investors don't want to 10x their money or 9x their money in 5 to 10 years. They're trying to double their money in a matter of days or weeks. I think the craziest thing about this cycle has just been the institutional buyers. I mean, so many large money managers, traditional financial firms are starting to sort of move Bitcoin from this like speculative kind of just beta on tech play into its own sort of investable thing. And the dynamics of these buyers are just so different, right? Like I think retail investors are very keen on trying to buy low and sell high, but the cohort of people that are managing these massive pools of money, they're not even looking at the Bitcoin price, right? They're looking at the IBIT price. So they're not seeing this unit bias of like $116,000 per Bitcoin. They're looking at a stock ticker that's trading at $60 or $70. And they're a group of people who have just been conditioned to kind of terminally buy the top, like forever. Like people aren't really that interested in timing, their purchases of low fee, index funds or the S&P 500. The people that are managing the largest pools of capital in the United States are people who have just been buying the top for the last 50 years. And it's gone really well for them. So, nobody cares that Berkshire Hathaway stock, riffing from an Udi post from the other day that I thought was really good, that I largely agree with. Nobody cares that Berkshire Hathaway is a $700,000 stock because, the people that buy Berkshire Hathaway are that they don't care. They're buying quality and they'll buy it at whatever price they can. So that's kind of my general take on the market, is that the thesis is playing out. I won't be shocked until we're trading, or at least I won't be raising an eyebrow until we're trading at a much higher price than this. But I do think that this run up in price has been largely defined by or characterized by much more sophisticated and large scale asset allocators and money managers, shifting their allocation to Bitcoin from 0 to 1% or 3%, and the cumulative effect of that is quite large.
Yeah, I want to do a quick follow up to you before we go over to Zack, which is since November or whatever it was when Bitcoin started to really run, there's been a sort of, or maybe I should say since January of this year, there's been a decisive shift in U.S. Sort of top level policy when it comes to Bitcoin, and I think if you asked some people in the Bitcoin community, like, hey, what impact do you think that has? Pretty decisively, people will tell you that it's been a positive shift. And so the question here is to what extent do you think a sort of friendly administration and potentially friendly Congress, I guess we're kind of yet to see where that lands, has impacted the sort of institutional interest in Bitcoin?
Yeah, I mean, I think the truth is, like, most people who are in finance, right, who aren't Bitcoin or crypto native, they trade largely based on broad theses and narratives. So whereas like a sort of close monitor or a close watcher of Bitcoin policy might be sort of trying to evaluate the probability of a strategic Bitcoin reserve, for example. I think when you talk about Wall Street generally, the details aren't as important. It's the narrative, right? I remember, Zack, you and I were talking the night of the election in Las Vegas, and you were telling me that some of your hedge fund buddies had sent you kind of the general Wall Street takes on, like, what are the trades if Harris wins? What are the trades if Trump wins? And one of the sort of, I think it was maybe the top trade for the Trump win scenario was Bitcoin. So I think there's a bit of like sort of mimetic reflexivity here, where people know, okay, Bitcoin is larger, it's more liquid, it's deemed as more safe, it's been less volatile, but also, there's just, it's kind of the left curve take of like, okay, the president likes Bitcoin, there's a Republican trifecta, so I should buy Bitcoin because generally there are conditions which will engender a higher price of Bitcoin. So yeah, I think that there are certainly, more sophisticated investors that are looking at things like Genius and are taking seriously the commentary from, people like Treasury Secretary Bessent, who's, putting out some, I think, reasonable, but to the uninitiated, probably wild projections about the growth of stablecoins, and are, making bets accordingly. I think that's why we saw like Circle stock go up to, like, I think at one point at the peak, Circle was worth the sum total of the like USDC that they had issued, like trading at a 300x price to earnings ratio. And I think that was largely the same thing, right? Like, people want to bet on stablecoins. How do you bet on stablecoins? If you're a Wall Street investor, you buy the publicly traded stablecoin company. I mean, you don't think more deeply about it than that. So I think a lot of the price action that is driven by the administration is less tied to kind of probabilistic assessment of certain policies and more of a general, like, this is a pro Bitcoin and pro crypto administration, I'm going to allocate accordingly. I don't know if Zack disagrees, but that's kind of my take.
I think I agree with a lot of that. The part maybe I disagree with is the role of treasury companies in the current moment. I think the zooming out, the thing that is driving over the last few years, the Bitcoin price action, and you could start it at different points. You could start it, I think, really in 2020, but it's cleanest to be started in like 2023 or early 2024. It is Bitcoin going from being an illegitimate asset to a legitimate asset in the eyes of mainstream investors. And the first sort of price leg that we saw was like from 30 to 40K to 60 to 70K, which is the ETFs coming out. I think that was the first and maybe most important part of it, right? Of course, there's a policy tie-in, and that it was a court case that forced the SEC's hand, but that was a significant move that, like, repriced Bitcoin. The next one was the election in November. I think the move from 60 to 70 to 90 to 100 really was a Trump trade. And I actually think it is more about like, what does it mean to have an administration that doesn't hate Bitcoin than Trump is going to do all of this stuff. I actually think that the United States government buying Bitcoin and putting it on its balance sheet, or real nation state adoption, that's a leg that's still ahead of us. But having a friendly as opposed to an unfriendly presidential administration, I think that was a price move. And I think the one we just saw, I don't think it's treasury companies, because with the exception of MicroStrategy, there just isn't a lot of treasury company buying, right? Metaplanet's buying a little bit, and there is a lot of money kind of going to these treasury companies. I think it will be more over time, but the buying from most of that will be later this year. And there's just not that much volume outside of, again, one company, MicroStrategy. What I think this last leg from like 100 to, the 120 or whatever range we're in now really has a lot to do with the fiscal bill that was passed, the big, beautiful bill. And I think it is a recognition that even when, Republicans have control, even when there's a huge amount of rhetoric about Doge and we're shrinking the government and we're finally going to be fiscally responsible, like that's all kind of bullshit. And we're just never going to be fiscally responsible. And there's nothing that is stopping that train. And that this sort of unfunded spending is a form of stimulus. And they changed the accounting rules to say that the pre-existing tax cuts were already spent, so they didn't need to count when they make those permanent. And like, obviously the Democrats are also going to play that move next time they're in power. So there's going to be more unfunded spending. They're cutting a lot of Medicare, which the Democrats, when they're in power, are going to put back. And at the same time, the president's calling for removing the Fed chair for not lowering rates enough, right? Which is, would be running things incredibly hot. And so I think, like, how do I think about that? Like, it's part of the Bitcoin becoming a legitimate asset, but specifically this price move is about the thesis for Bitcoin, right? The fiscal irresponsibility thesis, the hard money thesis, literally being proven out by the legislative branch of our government. And like, people can see, how this movie ends. And I think that's starting to get priced into Bitcoin.
All right. A subject of the week, it is Crypto Week in DC. I actually don't know the specific origins of Crypto Week, but I know that there is involvement from the White House and involvement from Congress here. But the gist of it, for anyone who's not familiar, is that basically the House and the Senate will be reviewing 3 crypto bills: the Clarity Act, which is the market structure bill, the Genius Act, which is the stablecoin bill, and then there's an anti-CBDC bill. So we'll kind of jump through each one. But before we do that, David, I want to go to you to kind of get a lay of the land here. I know you sort of have a good pulse check on, the landscape in DC, the dynamics that are at play. So I'm kind of curious, like, how we even got a crypto week in the first place, and what that maybe means specifically for Bitcoin, because I think that might be kind of getting lost in DC this week.
Yeah. I mean, that's also one of those things where, it depends on where you want to start the story, I guess. But I guess the most logical place to start would be in the election spending in the 2024 election. The crypto industry writ large kind of did something unprecedented in American politics, at least to my knowledge. They went from being a relatively minor player to being the largest corporate player in politics in America by a Texas mile. Like, I remember reading this statistic that I think it was like 1/3 of all super PAC donations from corporations and PAC donations from corporations were from crypto companies. So they kind of just hit the scene with an insane level of spending. And then I think a lot of what we're seeing is really just downstream of that, right? When you come into American politics and you spend more money than any industry, it's not shocking that you're going to start seeing things like Crypto Week in DC. I mean, crypto policy itself has gone from being kind of this niche thing that, a handful of people were paying attention to kind of like the hot thing in DC and sort of an issue du jour. I mean, there are like 9, I think, crypto policy groups in DC. We recently saw things like the Solana Policy Institute, great name choice by them. So yeah, I think a lot of this is like election spending, really downstream of that, at least in terms of elevating the issue. The other big thing and the other big dynamic is that you have a lot of senior leaders who are just genuinely interested in Bitcoin, right? Like JD Vance has disclosed, for a while now that he owns, a modest amount of Bitcoin. RFK has his entire net worth apparently denominated in Bitcoin. So a lot of the president's inner circle are, ideological and financial supporters of the industry. But I think the interesting, sort of thing to watch, and I guess why this is all coming to a head now, is I think it's clear that if you spend, $150 million in an election cycle, you can get your issues elevated and discussed. I think the question is, whether that and favorable political conditions are sufficient to actually turn that attention into policy. Frankly, I think the sort of beltway view from people outside of the crypto policy world has kind of been that the crypto people are rich but dumb. And that the incentive for politicians is to smile, to take photos, to post bullish things on Truth Social or X, and then do very little in substance. Because that's really the game of the sort of policy industrial complex in the United States. Like, you don't actually want to be pay for play if you are a large super PAC or a large advocacy organization. Your incentive at that point is to kind of keep the donors coming back. So you come in and you spend $150 million in an election, and for a lot of actors, the rational incentive is to work really hard on getting your pet issues done and get right up to the finish line. But geez, we couldn't get it done. We need your help in the midterms. Then we'll get it done. Geez, we couldn't get it done in the midterms. We really, really need your help in 2028. And then we'll be able to do all of the things that you want. I think the crypto week and the three bills are kind of the point at which that thesis will be validated or invalidated. Most of the money that was spent in DC with respect to crypto was not Bitcoin specific, but was the large exchanges, financial services companies, stablecoins. So, there's a reason that we've seen such a strong focus on market structure and stablecoins respectively. It'll be interesting to see what comes of this. But it's, I think most of this can be attributed to those two things, the massive amount of spending and the fact that you have a lot of senior leaders who are, sort of supporters. Whether those two things are enough and a Republican trifecta are sufficient to kind of codify longstanding desires from the crypto industry in the law, I think, remains to be seen, but will be answered in relatively short order.
Quick follow-up, and then we'll go to Zack here to dig into the substance a little more, is to what extent, obviously Bitcoin and Bitcoin companies, Bitcoin supporters had not put as much money towards these particular interests as, the crypto industry writ large has. But to what extent can Bitcoin sort of tag along on some of these proposals? I think, the BRCA is a good example of that. But I'm just curious, to what extent, and this is largely kind of, a strategy we use at BPI, is to what extent can Bitcoin sort of find its way into those larger proposals that have sort of the money behind it?
Well, because if you're not talking about stablecoins exclusively, it's pretty much impossible to have a conversation about crypto and not talk about Bitcoin, right? It is one of my favorite sort of dynamics to see play out, where I think the sort of the fact that Bitcoin is 60% of the crypto market and is maybe 1/10 of that in terms of political spending is extremely strong empirical evidence of the thing that actually makes Bitcoin different, which is that it's decentralized, right? There's not a Bitcoin, there aren't many Bitcoin companies, right? There's no Bitcoin CEO. There's no Bitcoin foundation that can print new Bitcoins to go spend like Ripple can. So I think the fact that Bitcoin is so underweight in DC spending with respect to its market cap, relative to its market cap, is just excellent evidence that Bitcoin is different. And I think that even if you are not a crypto native person, but you're a DC political person, it's hard. You sort of see that. You're I'm taking all of these meetings with the heads of these token foundations or these exchanges, but I look at the data that my staffer prepared for me, and it looks like most of this market is Bitcoin. So I think at a very high level, any sort of spending that's done to elevate crypto kind of necessarily drags Bitcoin along with it. And because Bitcoin is the largest cryptocurrency, sort of the foundational reserve asset within the cryptocurrency world, it benefits a lot indirectly from that. But I also think the nature of the spending, who's actually paying the money, who's sending the dollars, and sort of mimetically and empirically validates something that, a sort of core thesis that BPI was built on, which is that it's tough to talk about crypto as a whole when you're talking about regulation, because crypto is so diverse, and most of these tokens are, basically securities, or maybe not securities, but they're essentially corporate entities on a blockchain, at least they operate like that in practice, right? There's like a small group of people that can make decisions about spending large pools of capital. Bitcoin has none of those trappings. So yeah, I think it's definitely reinforcing a core truth, which is that Bitcoin is just fundamentally distinct from the rest of crypto.
Yeah. No, that's great. All right, Zach, I want to dig into the substance of these, and I kind of wanted to go in order here. So as far as I'm aware, right, Genius is sort of the furthest along, and maybe that's up to debate now, but just curious kind of like what's in that, where we're at. I know that there was some talk. I saw a tweet from Marjorie Taylor Greene today about, how it was basically a backdoor CBDC. So just kind of curious, your thoughts more broadly on where Genius is and what hurdles it likely has to overcome.
Yeah, and look, without downplaying at all how far we've come in terms of the Overton window for the seriousness of Bitcoin and crypto and the huge shift in the administration's attitude and a lot of education on Capitol Hill among lawmakers, this has been a lot more like Crapto week so far. We have, the federal prosecutors trying to put an open source dev in prison. We had 3 bills belly flop, I think, because they just weren't handled well politically. It takes time to get people sort of around the table on these bills, and rushing them for optics, I think, was pretty short-sighted. So there are 3 bills that were up for a vote today. There's the Genius Act, which has already passed through the Senate, which is common sense stablecoin legislation. It does 2 things. It provides consumer protections to make sure that if you're using a stablecoin and you're American, that stablecoin is backed by dollars or dollar equivalents on the back end. So you're not going to get rug pulled. And then it provides sort of longer term regulatory clarity to non-crypto native financial institutions that want to use stablecoins as payment rails. That's something that might have even gotten done. There was talk about that getting done at the end of the Biden administration, right? This just shouldn't be a controversial thing. We talk specifically in this bill about private stablecoins. It just isn't a CBDC. This is Marjorie Taylor Greene is sort of just wrong about that. Now, another bill that was voted on today is the anti-CBDC bill. And we heard that this one was more politically difficult than the others. I really think that CBDCs, are a bad idea. How bad an idea they are is a function of who's issuing them, right? I'm more worried about a Chinese government CBDC than a US government CBDC. The sort of most serious US CBDC effort out of MIT had, friend of the pod, Neha Narula involved. It was a, privacy protecting thing. Like, honestly, something like that would not have been so bad. It would really have been a modernization of the dollar. But I totally understand the concerns about having granular government control and surveillance capabilities over base money, but no one is seriously doing that right now. So I just don't know that that's as much of a priority, and certainly not something to sink crypto legislation over. And then the third is the market structure bill, which we talk about a lot on this show. Clarity Act is, it's a good step in the right direction. It really is important to figure out the rules of the road for what's security versus commodity. There's a lot of money behind that. I think there's a bipartisan recognition that that's something that needs to be done. There's not great consensus on what exactly those rules should be. And then was specifically, we really like Section 110 of the Clarity Act, which protects non-custodial developers. That's important. But it feels to me like trying to vote on these 3 things was more optics than it was politics. And we need to book the Genius Act as a win, right? That just shouldn't be that hard with all of the money that was spent and all the momentum we have. That it really shouldn't be that difficult. So I'm hoping, as we're recording this, that they're going to do another procedural vote just on the Genius Act, so it'll get through. If that
nope,
doesn't happen,
we just got word. I just got this text. The whip just announced no votes the rest of the day.
So there you go. If we get to the end of Crypto Week without this, we're not going to have the signing ceremony on Friday that everyone's hoping for. And that's going to create its own difficult politics of Republicans who, felt like they were dragged along on the big, beautiful bill because that was the administration's priority. They were dragged along in the Senate on Genius when they didn't necessarily understand what a stablecoin was, because there wasn't sort of so much ground level education. I think there was more focus on, is this stablecoin bill going to hurt the banks? And there were special banking interests involved. Is it going to favor onshore versus offshore stablecoins and different rules for those? And not just hey, stablecoins are just a way to move dollars around. They're not scary. It's not the same as this dystopian CBDC. It's not they are backed when this law. There's just if there had been more focus just on getting it passed and why it's good policy, I think this might have gone differently. But if we don't get this, what should be easy bill passed, I think it's going to Republican leadership is going to look around and be like, hey, we tried. There's just not going to be that much appetite for other important legislation down the road. So I think we need to find some way to book this win.
Yeah, I feel like it's sort of mildly disappointing. I think this has been kind of in the conversation for a while. At the same time, there are these complicated dynamics at play, and I think the thing that is most interesting at this point, and David, I want to get your thoughts on this, is the extent to which like Bitcoin has become sort of like a Republican issue. We had a polling agency at our Bitcoin policy summit basically come in and say like, look, as far as our data was concerned, like it will be a long time before Bitcoin is no longer sort of Trump coin. And at the same time, there's sort of massive, or there's only upside for someone, regardless of what side of the aisle they're on, to basically be pro Bitcoin. And so I'm curious, like the extent to which this week, Crypto Week, has shown that maybe not all Republicans are sort of pro crypto, and what that means going forward.
I mean, look, I think the Trump administration's strong endorsement of Bitcoin and cryptocurrencies is the impact of that on, especially the sort of voter class that is really like high information, like that reads the mainstream news, listens to the mainstream news a lot, is really difficult to overstate. The sort of point that you raise around like the kind of game theory of this is super interesting to me. Because I strongly agree with you that from a rational perspective, it is just wildly plus EV to like be pro crypto. Like I think one mistake that a lot of people make is sort of reversing the causality of this phenomena, right? I think the average crypto dollar, right? We'll just talk about the money that was spent. I think the average crypto dollar that was spent on the election in 2024 is utterly indifferent between red and blue, right? They want rules and policies that give them the space to do business. I think the fact that the Biden administration was anti and the sort of Republicans were pro is almost completely arbitrary. Like if it had been reversed, then the crypto industry would be one of the largest donors to the Democratic party in the United States. So I think that part of the issue that people have is they see, okay, well the crypto people spent money on all these Republicans. The Republicans like crypto, so therefore crypto is a Republican phenomena, and that's like not really a sound argument. I think the crypto donor class is opportunistic and indifferent, frankly, with respect to issues outside of cryptocurrency. So they were just backing the team that said the right shibboleths and did the things that they wanted them to do. So I think, as a result, especially with the fact that so many Americans own Bitcoin now or have some crypto exposure now, it certainly like defies the kind of, one of the most old kind of long-standing adages in American politics, which is that voters vote in accordance with their checkbooks. So voting against or being against something that like 1/5 of people in the United States own is kind of a very silly move, but people aren't rational actors, right? Like, you can talk about sort of the game theory all you want, but at the end of the day, I think what we're seeing is a sort of less structured and maybe methodical calculus, but instead, like, you have to understand the sort of broader dynamic, which is that for the Democratic sort of machinery and sort of messaging apparatus, Trump is bad. They think that Trump is in office to enrich himself. They're looking for every example that they can to substantiate that narrative because it's a strong political narrative, an argument for them. So crypto is just a perfect example for them of a broader point that they want to make about the White House and about the Republican Party. So I don't think they are fully grokking the extent to which this is a cell phone. Maybe that has changed though. I think we're starting to see signs of that sort of Elizabeth Warren anti-crypto camp within the DNC starting to fracture a bit as individual members are realizing that, maybe blindly being anti-crypto at every turn is like a losing or not sound strategy. So yeah, I think like long term, the incentive is for Bitcoin to be nonpartisan. That's sort of all of like the, strategy game theory, like analysis, right? The sort of core like truth is that I think Bitcoin is a mirror in the same way that any tool is a mirror, right? We don't really make normative judgments about tools outside of the extent to which they represent human nature. You can use a paintbrush to say horrible things in a work of art. You can use a paintbrush to create a beautiful piece of art that uplifts the soul, right? You can use a gun in self-defense or to rob a convenience store. The list kind of goes down. So I think these sort of normative arguments that people are making are really silly. I think Bitcoin is extremely political in nature. I mean, its sort of core quest is to separate money and state, or at least to remove the state's kind of monopoly on the production of units of value. That is an extremely political goal, but I think you'd be hard pressed to make the case that that's a particularly partisan goal. And then when you look at sort of the features of Bitcoin and how it's used globally, I think you'd be hard pressed to argue that it's conservative, right? The principal use case of Bitcoin outside of speculation by, investors, is to protect against the overreaches of the state, to protect against a dictatorship and authoritarians who are freezing bank accounts. I mean, the stories are sort of endless where outside of the United States, Bitcoin is a tool. I was abroad recently in some emerging markets, and you talk to people about Bitcoin there, and nobody bats an eye. They don't have some like normative philosophical take on whether it's good or bad. If you live in a country that's experiencing double or triple digit inflation, or you live in a country where saying the wrong thing could lead to your assets being frozen, your bank account being seized, you're not like debating the philosophy of Bitcoin. You're just buying it and using it because you need to. So I think that a big part of the sort of partisan, conversation, it's like there's sort of two different worlds taking place. There's like Bitcoin in the context of the United States, where most people don't think about these problems because they don't face them. And then there's the Bitcoin as it's used globally, which is largely as a tool that very much aligns with values that are championed by the progressive left and the center left in the United States. So I guess, like, in short, I think as Bitcoin continues to mature and grow, the arguments about sort of Bitcoin being ontologically like right wing or conservative will get weaker and weaker. I think as the game theory plays out, it will be more and more costly to be anti-Bitcoin. And so I guess the TLDR is that I think it's impossible to argue that Bitcoin was not made much more partisan by the sort of turn of events of the last year or so, but I doubt that it stays that way. I really do. I don't think that the internet is partisan now, and there's no reason to think that long term Bitcoin will be partisan. I think the only world in which that's the case is if the sort of Elizabeth Warren camp wins out, and she and her colleagues are successful at making opposition to cryptocurrency a sort of mainstay plank of the party. But my guess is that effort will fail because they'll just be too severely punished at the ballot box and in donations if they choose to go down that path.
Zack, one interesting dynamic that I'm observing, and this is sort of a additional nuance to what David was talking about, is also folks who maybe generally would be considered part of like MAGA or Trump admin, right? I'm thinking, at risk of spending too much time talking about Marjorie Taylor Greene, you have her, tweeting, sort of being anti-genius, right? And then you have Bo Hines tweeting like, "Hey, we're going to get genius done this week." And those two, I think, generally speaking, from like an outsider perspective, would look like they're sort of homogenous in their opinions about this bill. And so I'm curious where the breakdown is there. Is that something ideological, or is there something sort of different at play?
Yeah, I have to be honest, without commenting directionally on her politics, my sense of Marjorie Taylor Greene is she's never met a conspiracy that she doesn't like. And so the idea that we're going to have digital money on the blockchain, of course, that's going to be an instrument of state control and whatever. And I would say that, like, look, there are many of people sort of in Bitcoin and libertarian world who are, in many cases, rightfully skeptical of government control and instrumentalities of government control. But if we have dollars, we're going to have dollars. Dollars are important for the foreseeable future. Having dollars move on open networks that are not controlled by the government seems just strictly preferable to a top-down state-controlled system where the laws can change and money can't move. And the sort of state control mechanisms in the Genius Act. In order to legally offer stablecoins to U.S. holders, you need to have the technology to comply with lawful court orders. That seems like a pretty low bar. You need to, at the creation and redemption of stablecoins, you need to KYC. It treats the issuers of stablecoins as money transmitters, but it doesn't really have strong restrictions on peer-to-peer secondary transfers, and it's quite generous in that regard. So on the spectrum of state control to pure libertarian, the Genius Act is like a pretty good balance, right? And I'm someone who's pretty sensitive to the state control arguments and the privacy arguments, and so I just think that that's misguided. You can have your views on different stablecoin issuers and how much they work with the government and how much they cooperate, but if the comparison point is the banking system, I just don't know that there's so much merit to the argument that this is meaningfully moving us in a direction of more state control.
Zell, we were chatting a little bit about this in the lead up to hitting record here. You had a take about CBDCs, and I would like to hear that. And I think everyone else would probably like to hear that too.
I think it kind of goes back to what Zack was talking about earlier. In the same way that crypto is such a broad term that if you don't go any deeper than that, it's very difficult to have like a meaningful conversation because it's just unclear what's being discussed. I think the same is true with CBDCs. They're largely treated as like a monolith, as in that they mean like one. Like CBDCs lack a stable, coherent meaning. CBDCs could take, in theory, like a limitless sort of set of forms. Some of those forms could be quite Orwellian. Some of them could be, pretty much the same thing that we already have. So I guess like my hot take on the CBDC discourse is, ironically, right, insofar as Bitcoin was a sort of quest to fight the banks, I think CBDCs are, in the short term, probably a greater threat to the banking industry than Bitcoin is. In the long term, I think Bitcoin is the greatest threat to banks. But in the short term, you can easily imagine a world where if the government issues a retail-facing central bank digital currency, there's simply no middleman to arbitrage the interest rates into people's yields on their savings. So I think it's no surprise that the Bitcoin crypto folks have found kind of maybe unnatural bedfellows in their advocacy against CBDCs with, the large kind of corporate interest PACs and financial services like lobbies in DC. I mean, the core argument that's made about central bank digital currencies is that they're extremely deleterious for privacy and for civil liberties. Those arguments to me are quite weak because the way that most people transact now is with a digital dollar that is, frankly, the issuers of which have way fewer laws and obligations with which they have to comply than the federal government. Like if you're using Venmo or MasterCard or Visa, there's very little stopping these corporations from doing things like aggregating your data on what you buy, when you buy it, correlating those decisions to other pieces of information they have about you, training AI models based on that data, selling that data to other corporations. You basically give all of your rights to privacy away by virtue of using these private services and these private companies. If you use a dollar that is issued by the sort of a central bank currency that is issued by the government, just the contrarian take would be is that they actually have more stringent restrictions on what they can do with that data. And, they have sort of a stronger set of like legal requirements with which they have to comply. The other thing people miss is that, you could say, okay, well, I'd still rather have my data owned by a corporation than by a government, but that's sort of a false choice because there's nothing stopping the government from getting that data from the private companies. So in some ways, the CBDC question is just a question of cutting out, financial services intermediaries, whether they are payment providers or banks themselves. That's not to say that there couldn't be issuances or instances rather of a CBDC that are quite dreadful. And one could easily make the argument that the sort of incentives of the state sort of would push them to, create a CBDC that would be quite deleterious for human flourishing. But it's not at all clear that that's what a CBDC is. So I guess, my contrarian take is that I think a lot of the things people tout as downsides of CBDCs are sort of non-unique and are, in fact, maybe lessened in a CBDC world, in comparison to the sort of TradFi status quo. So yeah, I guess that's my sort of contrarian take is like they could be really bad, nothing intrinsic about that. And I think people overlook the extent to which we basically already live in a CBDC panopticon right now, which is another reason I think Bitcoin is so important. I'm sure Zach has takes on this though.
Yeah, Zach, go for it.
Yeah, to push back a little bit, I think there is a feature of CBDCs that actually is intrinsically worse from a privacy and civil liberties perspective. And that is the sort of granular policy control the government would have over CBDCs, right? So you can pass all sorts of laws about in the traditional banking system or with private stablecoins, what issuers have to do, what companies that are depository institutions have to do, that you can gather information. But really, like, you're now talking about these institutions following the law, following court orders, maybe, in worst cases, informal government requests. Whereas like the granular, like coding government fiat according to government incentives, right? This starts to look a lot like what we associate the Chinese government with. It's like, oh,
Yeah.
your CBDC goes farther if you're buying the approved good that, eat the bugs, right? And it goes less far if you're buying fossil fuels. And, everyone's getting a stimmy check, but it expires at this amount of time because we want to stimulate the economy. And the distance from policymaking to like monetary outcome, I actually think having some private institution as a buffer is actually really helpful and keeps you from the worst outcomes. And I would put stablecoins on the right side of that line. I think there is just a private institution that helps, plus a piece of public infrastructure in the blockchain that's helpful. Whereas like a CBDC that is government issued and is codable by government engineers seems more dangerous inherently.
Yeah, I think that's definitely true. Like, I think the privacy point is almost the weakest argument against CBDCs, but the level of sort of granular control that Zach's talking about is certainly like a unique and deleterious feature of central bank digital currencies. The other one is like, the imposition of just negative interest rates, for example, right? Like that's something that we've never seen in the United States, but you could easily imagine a world where if the government wants to incentivize spending, they could apply negative interest rates to all CBDC balances and incentivize consumers to, spend now rather than save. So you could imagine that playing out at the macro level or at the more granular level, like Zach is talking about, where you get a discount if you buy the good that has the carbon offset or what have you. So no, certainly not pro CBDCs by any stretch of the imagination. And I agree with Zach that I think stablecoins are kind of the right balance here, where as much as I want the world to sort of just move to a Bitcoin standard, people seem to want dollars, as evidenced by the market, a lot more than they want Bitcoin right now. And I think stablecoins are like just the cleanest, easiest kind of market driven bottom up way of meeting that demand for dollars with supply. But yeah, my contrarian take is that the CBDCs are as risky as they are to civil liberties in the way that Zach has outlined, they're quite risky to banks as well. So I just kind of find it ironic a bit that the sort of anti-bank crowd and the pro-bank crowd are shaking hands over this.
An interesting question. I think there was a couple of posts on the BPI website. David, correct me if I'm wrong. Like an anonymous banking insider basically tells you what's going on, privacy-wise within the banking industry. And, for most, I think that's enlightening. So, yeah. All right. The next topic here we wanted to discuss here was the Roman storm trial in the Southern District of New York. It got started yesterday. I saw that they seated a jury this morning and we'll do opening statements, I guess, what was after lunch today. This is Tuesday, July 15th. So, Zach, I don't know if you want to, kind of add any detail here, talk about what's at stake. I know we touched on it briefly last week, but maybe.
Yeah, so we've talked about the Tornado Cash case a bunch on this show. We moved past sort of the most critical legal step in that case for open source development, which was the motion dismiss. The sort of, in the American legal system, judges decide issues of law, juries decide issues of fact. Unfortunately, the judge in this case sort of went the wrong way on the key issues of law, and now the jury has to decide issues of fact. So most of what's going to happen at this trial is going to be evidence around the conspiracy to commit money laundering charge, which is really a question about, did Roman Storm intend to, through offering Tornado Cash, did they intend to help criminals launder money? My understanding is a key piece of evidence here is going to be a stupid t-shirt that calls itself, is, they made like a joking t-shirt that says, I used Tornado Cash to avoid OFAC sanctions and all I got was this dumb t-shirt. Hopefully the defense will be able to put that in context as a joke, and that's not going to end up with someone in prison for 20 years. I think also key evidence is going to be the internal communications of the Tornado Cash team when, it appeared North Korea was laundering a bunch of stolen Axie Infinity money through Tornado Cash. And there's going to be important questions. What's the difference between knowing something and intending it? But the other sort of charge in this trial is unlicensed operation of a money transmission business. Now, the version of this charge is left. Unlicensed is a misnomer because no longer is the government actually claiming that Roman Storm needed a license to run Tornado Cash. They're using a subpart of the statute that says if you knowingly transmit funds that are the proceeds of crime, not intend, but know here, then you're guilty. And certainly at the time when the North Koreans were moving money, I'm sure the evidence will show that Roman Storm knew it. Of course he did, right? There's so much money moving through that the hack was quite public. And so then the key defense here is going to be that as a matter of fact, he actually didn't transmit money. And that's going to be really interesting to see how the defense sort of explains that to the jury, how the government tries to argue this to the jury. And this will be the first time that the issue of is a developer of a non-custodial tool transmitting funds or not will be decided by a jury of non-experts, right? Not a judge, not a prosecutor, not a regulator, but a jury of one's peers. And I think the outcome on that charge in particular is really important from a policy perspective because it'll determine how likely or not prosecutors are to bring that type of charge in the future. If they know it's going to be shot down by a jury because a jury has the common sense to know that if you just publish software, you're not transmitting anything, that could be really helpful. Whereas if the government's able to get a conviction on that charge, that could be more problematic.
Got it. All right, we're gonna wrap here. We not quite at the hour, but good chat. Zell, thank you for joining us. I have a feeling you'll probably be back at some point. But yeah, we'll see everyone next week, and thanks for tuning in.